Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into those dry corporate filings to find the juicy details that actually matter. Today we're unwrapping a Form 8 from the Federal Home Loan Bank of Topeka. Now this one is a little different because it is not about big profit jumps or losses, but about something fundamental to how they operate getting money to lend. And let me tell you, the way they talk about it is even more interesting than the numbers themselves. Before we dive in, if you like getting these corporate secrets spilled in plain English, make sure you hit that subscribe button. And hey, we've got a fantastic community gathering in our Discord server, link in the description below, where we break down these filings even further. So what exactly is this 8K report all about? Well, think of it as a quick update to the stock market. When something significant happens at a company for the Federal Home Loan Bank of Topeka, which we'll call FHLBank Topeka for short, this report is mainly about how they get the money they need to do their job. And their job is pretty important. They provide funding for housing and community development across their region. Now, the core of this filing is really about how FHLBank Topeka raises funds. They get most of their money not from customer deposits like your typical bank, but from selling debt to investors. These aren't just any debts though, they're called consolidated obligations. Imagine this as a giant piggy bank where all 11 federal home loan banks across the country pool their borrowing power. This means that if one bank has trouble repaying, the others are on the hook too. And don't think the US government guarantees this. It is all backed by the financial strength of these 11 banks. So, what does this specific filing tell us about their borrowing activity? It details specific debt issuances that FHLBank Topeka is primarily responsible for. This isn't just a general overview, it gets into the nitty-gritty of individual debt instruments. We're looking at things like bonds and discount notes, which are essentially IOUs they issue to get cash. Let's look at the actual activity reported here. We see a trade date of the 25th of November, 2025. This is when they initiated the process of selling these debt securities. Following on from that, we see settlement dates, which is when the money actually changes hands and the securities are delivered. For instance, we have a settlement date of the 26th of November, 2025. For some of these issuances, meaning the deal closed the very next day. Each of these debt issuances has a unique identifier, a CUSIP number that is like a social security number for financial securities. It helps investors track them precisely. Now, a crucial detail for any debt is the maturity date when the borrowed money has to be paid back. We see a range of maturity dates here. Some are relatively short term, like the 26th of March, 2026 and May 26, 2026. These are for the discount notes. Then we see a much longer term debt instrument maturing on the 11th of December 2045. That is a significant commitment over 20 years out. And for that long-term debt, the coupon rate, which is essentially the interest rate it pays, is 5.44%. This is what FHLBank Topeka will be paying its investors year after year until that maturity date. The amount of money they are raising through these issuances is quite substantial. For the shorter-term discount notes, we see amounts like $500 million each. For that longer-term bond, it is a staggering $10 million. These are huge sums of money aimed at keeping their lending operations fueled. Now, one of the interesting aspects of financial instruments is how they can be called or redeemed. This particular bond has an optional principal redemption type. This means FHLBank Topeka has the option to pay back the principal early. And the style of this call option is American. In bond terms, this means they can redeem it at their discretion continuously on and after a certain date, right up until maturity. This gives them flexibility to refinance if interest rates change favorably. The rate type is fixed constant. This tells us that the 5.44% interest rate is set and will not change over the life of this particular bond. This offers predictability for both the bank and the investors. And finally, like all official filings, it is signed off by authorized personnel. In this case, Brad Gentry, FEP Treasurer, signed on behalf of FHLBank Topeka on the 28th of November 2025. This confirms the authenticity and accuracy of the reported information. So, stepping back and looking at this filing, what is the big picture? FHLBank Topeka is actively managing its funding. They are issuing both short-term and very long-term debt to ensure they have the capital available for their housing and community lending missions. While the numbers themselves are just dollars and cents, they represent the engine that drives their ability to support economic growth in their region. The fact that they are issuing long-term debt at a fixed rate suggests they are confident in their ability to manage that cost over time, and are perhaps hedging against future interest rate increases. The optional redemption feature on the longer term bond shows they are building in flexibility. It is a carefully managed process to ensure stable funding for important work. What we're seeing here is a snapshot of a financial institution diligently securing its resources. They are not making flashy announcements, but these are the critical behind the scenes actions that enable them to fulfill their mandate for housing and community development. The fixed rate on the long-term bond for over 20 years is a significant commitment, but it offers a predictable cost for their operations, shielding them from potential interest rate hikes. The ability to call this bond early while not currently exercised gives them strategic financial maneuverability. Overall, FHLBank Topeka appears to be navigating the capital markets effectively to secure its funding. The risks are inherent in any debt issuance, primarily related to interest rate fluctuations and the overall creditworthiness of the Federal Home Loan Bank system. However, the disclosures here suggest a responsible approach to financial management, prioritizing stable funding for their core mission. Alright, that is our breakdown of the Federal Home Loan Bank of Topeka's 8 filing. What is your take on how these banks secure their funding and how it impacts community development? Drop your thoughts in the comments below. If you found this deep dive into corporate documents helpful, please give this video a thumbs up and be sure to subscribe for more unravelings of the corporate world. And don't forget to join our growing community on Discord. The link is in the description. Thanks for tuning in, and we'll see you in the next decode.